Welcome back to this episode, which is all about gold. Now, gold's been in the headlines of late, as you've probably noticed, because it's reaching new highs. So I thought I'd do this episode just to explain what's going on, what's the historical context, should you be looking at gold right now, and what are the key drivers? So let's get straight into it. Gold is making new highs, so that is a historical record. But I've never been a huge fan of gold. And for that, you really need to zoom out and take a much longer view on what gold has done. And one of the reasons I don't really like gold is because it doesn't pay a cash flow. It doesn't have cash flow. It doesn't pay rents, unlike property. It doesn't pay dividends, unlike shares. Okay, there is no cash flow that gold can produce. So the problem with that is that how do you value an asset that doesn't have cash flow? I generally don't prefer assets that don't have cash flow because they cannot possibly be valued. So whether gold is trading at $200 or $2,000, what is the right value? We cannot base it off any cash flow that it's throwing out. Your property, you can because you have a rental yield. Stocks, you can because you have a dividend yield. With gold, there is no right answer, which is why gold can afford to do nothing over extended periods of time. There was a 25-year period between 1980 and 2005 where gold just went sideways. It did nothing. In fact, for most of that period of time, it was just declining, which can be hugely disappointing if you are owning gold for a long period of time. So unlike shares, which always have gone up, and the reason they've always gone up is not because of any sort of speculative activity. They reflect the fact that company profits, company earnings have always gone up. They always will. So that's why stock markets have to follow. But gold doesn't have to follow, as we've seen historically. Inflation. There's a bit of a misconception out there. The popular belief is that gold is a great inflation hedge. I'm saying to you, it isn't, okay? And there have been plenty of times over history where gold just hasn't followed inflation in the way it should have done, okay? So please don't believe gold is a good inflation hedge. It actually isn't. That same time frame we talked about earlier between in 1980 and 2005, that 25-year time period where gold did nothing. Well, actually, during that time period, inflation was up and down. At times during that period, inflation was quite high. And during that whole period, let's just say inflation was running at sort of 3-4% annually. Well, actually, during that 25-year period, the real value of your money obviously was eroded by inflation to the tune of around 50%. So the real value of your money halved, essentially, during that time period. And gold did nothing. It didn't follow. That whole sort of misconception around the linkage to inflation, the hedge to inflation, just doesn't stack up for me, okay? And it's not just historical periods, even recent periods. The most recent acceleration in inflation, you remember post-COVID, we had a huge acceleration in inflation down from 1% all the way up to touching close to 10% in terms of the inflation rate. And guess what? Gold did nothing during that time period. That was a really sort of true test, a recent test of gold's sort of inflation hedging characteristics. It was disappointing. Gold was not an inflation hedge during that time period. Okay, so we've established it's not a very good inflation hedge. Where it does do well and where it does perform as a good hedge is against sort of macro stresses, credit issues, liquidity problems. So cast your mind back to the global financial crisis, the big credit crunch during 2006 all the way up to 2010. Okay, that's when gold really outshone other asset classes. It really performed strongly during that time period. It doubled and more during that time period. So that was a good time to be holding gold. Also, during the COVID crisis, gold tends to be a fear beneficiary. Whenever there's something fearful going on in the world, whenever there is some sort of problem, macro or health problem or some other geopolitical issue, gold outperforms during times like that. Okay, so that's when gold did do well. It also tends to do pretty well when bond yields are going down, i.e. when interest rates are going down. And the reason for that is because, again, gold doesn't have any cash flow. It doesn't pay any dividends or interest, etc. So because it doesn't have cash flow, when everything else is reducing its cash flow, e.g. when bond yields are going down, gold becomes a relatively more attractive asset class because the opportunity cost in terms of income is reduced when bond yields are going down. And that's why gold historically has done quite well when bond yields have declined. More recently, the recent strength in gold has led people to believe that actually foreign central banks are getting rid of their dollar reserves, e.g. the Chinese central bank, maybe getting rid of its US dollar reserves in favor of gold. Now, let's just be clear, China has a huge amount of US dollar reserves, more than $3 trillion worth of reserves sitting in the Chinese central bank. That's $3,000 billion worth. Now, there has been a straining of relations between China and the US, and it stands to reason that China would love to reduce its holdings of US dollars in favor of other asset classes. It's easier said than done because to get rid of $3 trillion worth of foreign currency reserves is not an easy task. And if they were going to do it, it would have to be very incremental. So there may be an element of that going on right now, but I don't think it's very significant. And the reason I don't think it's very significant is because if you look to see and compare what's happening to the gold price and what's happening to the dollar, we're not seeing that pattern. If central banks around the world, the Chinese central bank, the Russian central bank, were seeking to off its dollar reserves in favor of gold, then surely we'd see a decline in the value of the US dollar. But we're not seeing that. In the recent run-up in gold, actually we've seen a mild strengthening in the US dollar. So we're not really seeing that pattern being borne out in reality. Now, as I said, there may be some element of central banks buying more gold. That may or may not be accompanied by selling off their dollar reserves, because that's not very easy to do when you hold so much in terms of US dollar reserves. What does explain the recent strength in gold? Well, a few factors, possibly. Okay, a peaking of interest rates around the world. We know, and the central banks, the US central bank, the UK central bank, has indicated, strongly hinted, that we're at the peak of interest rates, of this interest rate cycle. And as I mentioned earlier, as interest rates decline, as bond yields decline, gold becomes relatively more attractive because of the fact that you're not foregoing high rates of interest in order to own gold, which, remember, doesn't have cash flow. Okay, so that could be a big reason. That could be a big fundamental reason. Another reason is geopolitical concerns. We know that there are issues in the Middle East. There's a conflict there. There's a conflict in Eastern Europe with Russia and Ukraine. As I mentioned earlier, whenever there's stress in the world, whenever there is a sort of fear scenario, gold tends to do quite well. That stands to reason as well. As I mentioned, foreign central banks, there are people who are attributing the recent strength to foreign central banks buying gold. I'm not sure that is as strong as people believe, but that could be one factor. And there's speculation, and there are sort of traders out there, speculators who are jumping onto the bandwagon, buying gold because it's going up. And that could be a factor as well. But overall, gold is a bit of a black box, or I should say yellow box, because it's never quite clear what's going on with gold. The visibility isn't always as strong as you'd like. Okay, there are so many different factors going on. There's things like jewelry demand. There's all sorts of things which it's hard to pin down. But we are at all-time highs, as are equities, as are shares. Shares are at all-time highs as well. So this is not a unique asset class which is reaching all-time highs. So I guess the real question is, should you be owning gold? Should you consider owning gold? Full transparency, I own a little bit of gold. I've never been a huge fan of gold because, as I mentioned, it doesn't throw off any cash flow. So if you do want to consider owning gold, and if you don't own gold already, think about it in terms of your portfolio balance. Now, if you own maybe too much property, or maybe too many shares, or too much cash, it might be worth diversifying into gold, which, for the reasons I gave earlier, could be a potentially interesting asset class. Okay. It serves as portfolio insurance. It is a good hedge in various different scenarios. It's a great fear hedge. Okay. It's a great crisis hedge. So if you want to add some insurance into your portfolio, if you think something bad is about to happen, or if you just want the reassurance of owning some insurance, some hedges to your existing investments, then gold could serve that purpose in terms of buying some insurance for your portfolio. If you are looking at the gold chart and seeing it keep rising, if you think it's going to keep rising, and if you want to capitalize on that trend, well, there's nothing wrong with speculating for short-term gains. Okay. Just as long as you're diversified, you're keeping things in balance, you're not owning too much of one particular asset class, you're staying diversified. Nothing wrong with that at all. It could be one of your satellites. Okay, so that could be another reason. In terms of an inflation hedge, I explained earlier, should you be owning gold for inflation hedging purposes, or for speculating about what central banks may or may not be doing, about the whole sort of idea of dollar debasement? All of those reasons are pretty flimsy in my view, and I don't think you should be owning gold for those reasons. But for the other three reasons I mentioned before, absolutely, it's worth considering owning gold. And so finally, how do you go about investing in gold? Well, actually, anyone can buy gold. You can buy gold in your personal name. You can buy gold in your limited company. You can buy gold in your ISAs. You can buy gold in your pensions. And the latter two are great vehicles to own any asset class in a tax-efficient way. Gold doesn't throw off any income, so income tax isn't an issue. But if you're owning gold and looking to dispose of gold at some point in the future, and if you make any capital gains, if you own gold in your ISAs or pensions, then those capital gains will be immune from capital gains tax. You could own physical gold, so you can buy gold coins. You can own gold bars, which you can store yourself, or you can pay a company to store it for you. Just bear in mind that owning gold in the physical format incurs storage costs. Okay. Now, I own gold through ETFs. So owning gold through ETFs, that's a great way to own gold in a cost efficient, in an easy, passive way, and tax efficient if you own it in your ISA or pension. So ETFs are a great alternative because they reflect the price of gold on a day-by-day basis. They exactly track the price of gold. And there are lots of ETFs out there, both in the UK and in the US and globally. And you can own shares in gold mining companies. So gold mining companies, obviously benefit from the price of gold going up. So if the price of gold goes up, the amount of revenues and the amount of profits gold mining companies goes up too. In fact, it tends to go up in a leveraged way up. So that's another way. And finally, you can own gold, or you can play gold through options and actually realizing option premiums at the same time. So not only do you have the possibility of owning gold potentially at a discount to current value, you can also be making a recurring monthly income through options on gold. So I hope that was useful, and good luck with your investing, and I'll see you next time.